Everyone, myself Vaibhav. In today's session of Visual Jforex, we will be starting afresh with the use of indicator named Commodity Candle Index. As the name suggests, it was earlier developed to trade in the commodities. It was developed both for the purpose of finding the trend as well as the overbought or sold scenarios. And later on, it has come to be used in the other financial derivatives as well, including the stocks, currencies, and ETFs as well. So in today's session, we will see how we can design and develop the algorithm using this indicator. So I will give you the brief introduction on it also. If you want to go into the technical aspects of how this indicator is derived, what are its intrinsic characteristics, you will have to refer to the earlier session where I had talked about its technical aspect in details. Today's session is more focused on its functional aspects, where we will see the use of it in trading and how we can design and develop the algorithm. So this is the CCI block, and we have to define these four parameters depending on which we will get the output value. And for that, what are the combinations which we feel are likely to prove profitable? We will have to uh, observe the chart and then come to a configuration which looks good enough, then build the algorithm based on that and test it on the historical data, and then you will come to know whether the given setup is profitable or not. So for this session, I am using the overbought or sold as well as the with the trend techniques. We will be using the 4 hourly chart, hourly time frame, along with that the 15 minutes time frame as well. So this is going to be multi-layered algorithm, and we will use different time frames to look for different aspects. So on the 4 hour, we will need the CCI to be in the overbought or oversold territory. So whenever we will be looking for the sale trade, we want the CCI to be above the 100 level. Usually, as you can observe here, the zero is considered a decisive marker. When the output value is above zero, it is considered bullish, and when the output value for the CCI is below zero, it is considered bearish. But as the momentum keeps climbing, we see that after certain levels, the overbought oversold scenario gets generated, and one thing we have to take note of is that this is unbound indicator. That means there is no theoretically defined upper band and the lower band for these output values of the CPI, and that is one of the difficulty of figuring out when to get entry for the oversold or bought trades in CCI. So what I am doing here, we are using this 4 hourly time frame, and along with that also the hourly time frame. Here also we want the last hour's value to be either overbought or oversold. So when we will be looking for the sale trade, the CCI should have been overbought, and when we are looking for the oversold, the trade will be generated for the buy side. So whenever reversal happens, we will be looking to get entry for the long trade using the CCI, and along with that we will also rely on the 15 minutes time frame. So here, once we have, suppose if we are looking for a buy trade, we want the oversold situation to be there on the hourly as well as on the 4 hourly time frame, and then we will shift our attention to the lower time frame of 15 minutes. So provided other two conditions are in place, whenever we see that the momentum has started to now shift from bearish to bullish, so for that the output value will be the guiding factor here. Whenever we see that the CCI output has climbed up above the zero level, that will be the moment to look for the initiation of the buy trade. And when we see that the reverse is happening, when we see that the CCI value is in decline and it is now dipping below zero from above zero, and on the longer time frame charts the hourly and 4 hourly. If the overbought situation is present, we will be looking to initiate the sale trade. So that's how this system is going to work. Now we go back to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. Here I will change it to default instrument will remain as it is. I will change time frame to 4 hourly, 4 hours. Look back period will be 1. And now we have to get started with the if blocks logical. It's taking me too much time. Okay, one more CCI block. If we will be using on candle as our start point. And as is the customary practice, we first have to carry out the instrument subscription, which we will done fairly swiftly. This should match. And here, second variable should be Euro USD. Here it is. Then the position info, all position amount will be defined at 0. For hourly, now we have to also make use of hourly. And then we will use 2 more CCI blocks. This time the time period will be 15 minutes. Period of 1. And here this will be for hourly time frame as well. We will have to change the look back period to 1. As I explained to you on the chart, we are using multiple time frames to come to a point of execution which is likely to prove optimal. And then we also have to keep in mind the volatility. For that, we will use the historical candle cluster and the single historical candle as well. This will be of 15 minutes time frame. Will be one. And to retrieve the individual variables, we will need loop viewer. Here it is. This array of data can delete in, and we will be able to then retrieve individual variables. Okay. Or this also needs to be changed to 15 minutes. And look at period of. Okay. We also have to use two more get historical candles. This will be used to pinpoint the entry point. 10 seconds. Here also this will be changed to 10 seconds, and the loopback period will be 1 and 2 respectively. So this is how this blocks will be used to look at the immediate price action, whether the underlying instrument is overbought or sold on the longer to medium time frame, and then on the lower time frame it should be trading with the trend. So at that point in time we will be looking to initiate the fresh trades using this algorithm. Now for today's session we will stop here, and in next session I will first start with the calculation. We will need to define some of the levels for the volatility, and I think for that we will have to observe the chart and see what is the optimum volatility, which can be a crucial factor while determining whether to take the entry or whether to simply sit on the sidelines. So to that extent, the blocks which we have added so far will prove useful, and rest of the job will also be done by the calculation expressions. So for this session, now it's the time to say goodbye. Have a fabulous time ahead. See you next time. Till then, bye.